Hey guys, I like to keep my trading simple and conservative. So here, of course, we're looking at a chart. This is before the market opens, right here, the last candle before the opening. And I'm just going to go over what I look for whenever it comes to trading, especially a funded account. Now, I think the most important thing whenever it comes to trading is your morning routine. First of all, making sure that you're getting your 8 hours of sleep, 7 hours minimum. Trading is very psychological. And it can take a toll on you, especially when it's not going your way. It can tear you up and make you want to give up and want to quit. But please don't quit, no matter what. Trading's awesome. It's cool. But your morning routine, it's important. And it can be whatever you want it to be. Personally, whenever I wake up in the morning, I like to do a little bit of stretching, some core, some cardio, maybe a little bit of reading. I try to keep, an hour or two of just kind of me time, getting into the zone where my head is cleared and I'm able to focus on the charts whenever it comes time. So I normally turn my computer on around 7, but I don't trade until after it opens. I don't do any of this pre-market trading. So what I kind of look for whenever it comes to trading is I like to trade off support and resistance lines. And normally I just like to use the night before. So here we are, we're looking, this is the chart right before the opening. So what I would do is come over here and there's all these drawing tools that you can use. And I'll take this, and I normally like to go to the top of the wick, especially right before here. These zones right here can show us exactly which way we might go. And so as we can see here, hold on, I'll change this color. I don't really like the blue. I like the green a little bit more. Yeah, we'll do this. Okay, there you go. Use whatever color you want. Whatever color works for you, whatever color you can understand and see. So we can see that this has been an area that we've been messing around for a while, right? We had this little pop-up right here. Couldn't fully get past it. We had another area right here. And I'll go ahead and indicate those. So we had this one right here. We had this area right here. This area right here. And again, this area right here. This area right here. Right before the market opened. So I can say, okay, you know what? There might be a fair chance that we might have a little pop-up, right when the market opens. And, okay, that's fair. So let me go ahead and I'm just going to go through and I'm going to look at, okay, let's look at the bottom side here. Let's see our supports. So, obviously, this is an area of support, right? This is, a low. I like to indicate those with red. It's the color that works best for me. So, just gonna go over here, put all our colors, make it all nice and pretty. Don't be afraid to draw all over this thing, I'm gonna go ahead and put another one right here. I'm gonna look at, okay. Now, I was looking at this wick right here, but we can see, man, we danced on this zone from about 5 o'clock to about 6 o'clock. We played around in this area. That's interesting. So we're gonna keep an eye on that one too. We're just gonna go ahead and draw it all over. Alright. So that kind of gives me an idea. I call this my channel. This is the channel. Normally whenever it breaks out of one side, that's normally the direction that it's going to go. I do use a few indicators. You can read them up here. So obviously the timer is very important whenever it comes to the opening and closing of the candles. I use also current day open, high, and low. They just indicate where we're at. And I also use prior day. I use EMA 7 and an EMA 21. Normally, if the bars are above these, it's going up, or if it's below, it kind of gives me just an extra sense of direction. You can see, especially here, right here, color this, right here we're below it, and what happened, it dropped down, and we came over here above it, it goes up. Cool, good to know, nice information. So that's kind of just my setup right before. I'm also going to show my bracket. So here's, I'm using 2 contracts, labeled 2 contracts, and I'm going to go ahead and show, all right? So my stop loss is at 42 ticks, or 10.5 points, 10 points more so. Here's my stop, it's a trailing stop. So it'll trigger at 60. You know what, I'm going to change this to 40 actually for today. Yeah, we're going to go ahead and change that. All right, there we go. I don't know why that's how I used to have it set up. I have changed it to 40 now, so that's interesting. My first target, so first contract, gets taken out at 20 ticks or at 5 points, and that locks in $100. I like that. Then as soon as that hits 20, I have my break even set just to take me out. That way I don't lose whatever I gained. So that's kind of the way that I manage my risk. I look for supports and resistance, and I keep my brackets kind of tight. So I'm just going to go ahead and start the market here so we can see how it opens up. This is 10 seconds before it. So I'm going to show just exactly how my mornings would go. And we're just going to sit here and we're going to wait until it chooses a direction. I'm not going to jump in just because it's red doesn't mean it's going down. And just because it turns green means it's going up. Or just because I think it's going to go up, is it going to go up? No. We have to follow the market for what it's doing and trade what the market is doing. We cannot just assume or make, assumptions. So something I want to note is after it breaks out of here, the 79, 81 area, I normally like to give it a couple points. So I'll mark that real quick just so y'all can see it. So I'll probably take my trade after it reaches that line. That kind of just tells me that, okay, we've broken out of this and we're ready to go. So I'm just going to keep looking and looking and looking, and you can see we have other areas that you might stop out at. So that gives me, good amount of points. So I'm just going to let it do what it does. And here we are. And I just want a nice clean break. Nice clean break. And another important key is to make sure that you're staying patient. Don't rush or force trades. So make sure. Boom. I'm in. I am in. It's taking my first target. And now it's going up. There we go. There we go. It's climbing. It is climbing. So I'll get another 4 points there, and I'm out. Okay, so there we go. I had one target that was at 4, another target that was at 5, and right now we're up 180. So that's good. That's good stuff. So there's a minute left in this candle. I'm not going to take any more trades. We're done with that. Candle is done for and used, and the reason we don't do that, see how it pulls up right here? Imagine if you were to get in right here, and then it drops back down and keeps going. You don't want to do that. So we just want to make sure that we're trying to trade as conservative, nice and slow as possible. So what do I normally do? I wait until this candle closes. What I really want to see is I want to make sure this candle closes above this zone. I don't want it to go any lower. I'm not going to take another trade. I want it to stay above. We have 30 seconds left. See? So we're just going to wait. We're just going to see what the market does and trade it as we see. So I have 20 seconds. So what? I'll take another trade if it closes above. So we're going to wait. 16 seconds. I'm going to make sure it's a full close above our zone. 4, 3, 2, and 1. And we're in it. And there we go. It hit my first target. And now we're going to let it do what it does. And if it pulls, oh, there it goes. It's pulling. It is pulling. That's 10 points right there that it set me at. Let's keep it watching. Let's see. Let's see how many points we get. Let's see. It's pulling up. And it stopped me out. See? I like the trail stop. Protection. Protection, protection. There we go. By the second candle. It hasn't even been a full 6 minutes yet. And we are up 485. Good stuff. Good stuff. So normally I can call it right there. Let's see, I have 2 minutes there. We're going to go to minimize this. So what is my goal when it comes to trading? I want to make just a certain amount. So for the funded accounts, if you're trading the $50,000 account, the profit goal is $3,000. Well, we have 15 days to trade that. We only need $200 a day. Now, if you have the $100,000 account, I believe that's $6,000. We'll just break it down again. How much do you need? $400 a day. Right now, we are up $485. We are doing great today. Let's go back to the market and see what's happening. There's a minute 30 left in this candle. So we can take another trade. I would take another trade as long as it stays up here. Obviously, this area is gonna be. This is why it's important to look at the charts, study it. You see these wicks? Boom, boom, touched up twice. We came right into that area. If we drew a zone, it's right there. See, to the top. I go to the top of the candle. We hit that zone. So what does that tell me? That tells me that we might try going up again. We've already hit it once, twice, 3 times. It might retest it. We have another minute. So what I'm going to do is I'm going to wait for this candle. I'm going to see where it closes. If I can close, if I can stay above, maybe the top of this candle here, maybe that'll indicate to me, hey, we might be able to take another trade. We have 30 seconds. Let's see. I'll take another trade. Obviously, this is a playback. But we're gonna see. Let's see. That is the line for me. I'll go ahead and make the color that way it doesn't get super confusing. All right, there we go. So as long as we can, stay above there, I'll take another trade. I'm not gonna take it if it's going to the downside because we could get a ugly pullback. But if it stays above that green line, I'll take another trade. 5, 4, 3, 2, 1, and I'm in it. And there we go. We already hit the target. We hit our first target. I mean, just that fast. It moves 5 points like nobody's business. And there we go. We're in another trade. 3 candles in. It hasn't even been a full 10 minutes yet. And we are taking our third trade. And normally our final trade. I will take 1 to 3 trades and call it a day. That's all I want. I don't want anything more. That's the most I need. So we'll just let this trail out, and I'm out. Let's see what we're up to. 6:35. 6:35 in less than 10 minutes. That's crazy. So let's break this down, because I think the most important thing is to make sure that we're keeping a level head about this. Now, if you want to trade full time, or if you're even thinking of a side income, the average salary is $50,000 a year. Let's take that number and we're going to divide it by 252. That's how many trading days there are in a year. That's 198. 198 a day can have you what the average salary is. So you say, oh, I want 100,000. Okay, that's fine. Let's take that again. We're going to divide it by 252. How much is that? 396. Right now, at 635, you're doing more than that. We'll just call it 500. That's that right there. Now, obviously, is every day going to be like that? No. Every day is not going to be that perfect. You will have losses. It will go back. But keeping your brackets tight is what's going to help you become a profitable and consistent trader. And staying level-headed. There's a reason I keep the value in points. I don't want to see dollars. We are fueled by the emotion for the dollar. And we can see, there's 3 trades. We kept it to points. 635. So that's kind of just the way that I trade. Especially for the evaluation, that's the way I traded. Because I wanted to make sure that I got funded. I think that's what we're all here for. That's what we all want, is to be funded. Only way you can do that is consistent, profitable trading. And that is it. That's it from me. So thank you very much for your time, and have a good one.